Welcome back, investors, to Ticker Time News. I'm Adam, and it looks like Tesla just cruised past analyst expectations, but let's not forget that those expectations were lowered significantly in recent weeks. Now, we're going to get into Tesla's earnings and what Elon Musk said, and he's pretty bullish about the company. We're also going to talk about the market and how it is trying to prove that it is bullish, whether we believe it or not. And we're also going to talk about what to expect tomorrow. But the most important thing is your questions. If you have a question, leave it in the live chat and we'll go over it live during the show. So don't forget to ask your questions and we'll get into this. Now, there were revenue misses that, according to FactSet, Tesla did miss on revenue. Now, Tesla did recognize that a cool $324 million was made in full self-driving revenue. I find that to be pretty astounding. That's like, wow. They actually made millions of dollars, hundreds of $1 million on full self-driving already. And we don't even have the Tesla RoboCab or whatever it's going to be called. That's so interesting. And licensing of full self-driving. Will Tesla get to that point? It probably will at some point, but $324 million in full self-driving revenue. That just blows my mind. But let's not get too excited just yet about full self-driving. Automotive gross margins did take a dip, falling to 25.9%. from 27.9% in Q3 and 30.6% a year ago. Now, looks like margins are expected to take a hit following the recent worldwide, including here in the US, price cuts to the Tesla automobile. Now, or electric vehicle automobile. Now, Elon Musk is feeling bullish about the company. He says orders are currently double production following the price cuts. The real question is, will demand remain high in the coming weeks and months? I don't know. Now, the company also adjusted its guidance, which could be throwing some investors off. Right now in the after hours, Tesla is trading. It just closed at 152.35 in the after hours. So I need to adjust this real quick. They ended up closing out at 153, right? Oh no, 152.35. So that's where Tesla will open up in the pre-market trading tomorrow. 152.35. They did get to a high in the after hours of 153, and you can see bottom right corner of the screen here, Tesla closed at $144.43, up about 0.25% on the day, after being down significantly more in the morning, which is the case behind kind of like the market trying to prove that it's bullish, which we'll talk about in just a moment. But Tesla did close at 152.35 in the after hours. That's where trading will start tomorrow in the pre-session. And it got to a high of 153 even in the after hours. So pretty decent move. Glad to see you. Glad you are here. Absolutely, positively glad to see you. So 153 was the high in the after hour move. So over 5% for Tesla. So pretty nice, pretty nice. $1.19 on EPS, I believe that was. Yep, $1.19 reported as EPS on $1.12.8 expectation. 24.16 billion reported as revenue. Estimate was 24.66 billion in revenue, so missed it by about 2%. That's the official headline numbers. I forgot to mention those at the very beginning. But anyways, going back to this. So the company did adjust its guidance, which I think could be throwing some investors off just a little bit. Now, in the past quarters, we know that Tesla has said that it expects to achieve a 50% annual average, 50% average annual growth rate in vehicle deliveries over a multi-year horizon. Now, today, the company said that it's growing production in alignment with that 50% compound annual growth rate target it previously guided to, adding that in some years it may grow faster, some years it may grow slower. So for 2023, Tesla says that it expects to remain ahead of the long-term compound annual growth rate with around 1.8 million cars for 2023. Now, if Tesla delivers 1.8 million cars in fiscal year 23, that would be math with the pencil on the back of a napkin. That would come out to year-over-year growth of 37%, which obviously is below that 50% number. So that's what could be tripping investors in the after hours here. Maybe Tesla could have gone up a little bit more than to 153, but this needs to be ironed out. Was it a misspeak on Tesla's part? I don't know, but we'll dig into it after the show and read the full transcript and see if we can't figure it out. But it was 1.8 million cars for fiscal year 23. And again, doing the math, that's a 38% year-over-year growth rate, not the 50% that they said they would achieve. Now, in terms of deliveries, Tesla did deliver just over 1.3 million vehicles in 2022 and produced 1.369 million EVs. Now, it looks like production is outpacing deliveries by an increasing amount in recent quarters. It seems like it's going up quarter over quarter. Now, Tesla has described this as they are trying to build vehicles where customer deliveries are. So instead of building a bunch of, just hype, speculation here, let's just say that Tesla's building a bunch of Model S plaids, Model S plaids. Yeah, they are badass, aren't they? In Shanghai, but the majority of the deliveries are taking place in Texas. Well, that doesn't make sense. So let's get some Model 3s produced in Texas where the deliveries are taking place, trying to even that out a bit. So we'll see how that goes in the coming quarters. But there is more. So hold on. Tesla announced that the Cybertruck will begin production later this year. Now, we know this. They have said that previously. They also teased details about an upcoming vehicle set to be revealed at the March 1st Investor Day. March 1st. Could it be the smaller, cheaper EV, the quote-unquote Model 2? Or could it be a revamped Model 3 with lower production costs? What's your take on that? Only time will tell. So I find it very fascinating. I'm kind of hoping for a Model 2, if that's what they're going to call it. A smaller, cheaper, maybe hatchback type design. I've seen some, out there. They look pretty cool. But March 1st, and we should have something on that. Now, in other news, Tesla announced that it will be investing $3.6 billion at its Nevada Gigafactory to mass produce semi-vehicles and the 4680 batteries. So that's good news. You need Tesla to be investing that money to get returns in the future, to get to that 50% compound annual growth rate over that multi-year horizon. So we need to see investment like that. Oh boy, it's getting hot in here. I've got to roll my sleeves up. This talk about Tesla, it's getting me hot. All right, now, on the chart with Tesla, where it closed out of after hours, because the market shuts off at 8 p.m. Eastern. 152.35. That puts Tesla right about at its 50-day moving average, which right now is sitting at 152.24. So what do we got? 11 cents above that 50-day moving average. That's where it's at right now when the market, the after hours shut down, which is also perfectly aligned with the upper end of its zone. Now, I don't normally show the zones here. Right here, my arrow is horrible, but those two lines converge right there at 152.24. So that's the upper end of the zone for Tesla, and it's right at the 50-period moving average. Interesting. Could there be a rejection off of that? Or will this news from earnings spark interest in Tesla for it to pop tomorrow? Because the market is trying to prove to all market participants that it is bullish. And I'm going to show you how the market is trying to prove this. Now, it's trying to prove this by rotation. Rotation out of safe defensive sectors and into the old FANG stocks. The old FANG stocks, which I don't think over the next couple of quarters are going to perform that well. But for 2023, they have been performing well. As a matter of fact, on a relative strength basis, they have been outperforming the defensive names. I'm going to go through them to show you on a relative strength basis, they are outperforming. Okay. One last thing to wrap up on Tesla here is this chart. The upper end of the weekly expected move is at 146. So it closed 2 points below that. And now in the after hours, due to earnings, it is now above the weekly expected move. And we got today as January the 25th, which is a Wednesday here. So we got 2 days left in this market. If Tesla has now tagged, and it's tagged its 50-period moving average, it's over it by about 11 pennies. Could that be a rejection point, also being at the upper end of its risk zone? Could it pull back in to the weekly expected move and maybe tag this ascending trading channel or trend line, ascending trend line right there? That's a possibility too, okay? So if investors actually do the math again on the 50% compound annual growth rate and Elon Musk saying that, hey, this year will be on the high end of that, but 1.8 million deliveries doesn't work out to quite being 50%, will that get investors a little flustered? Like, hey, what's going on here? Or was it a misspeak? Okay, it's got to be ironed out. We got to know for sure about that little mystery. So we'll look into it this evening again. So with that said, let's keep rolling here. I want to go to the broader markets now. In the after hours, they held up very well. The Qs and the SPY have both ticked higher in the after hours. They kind of did so with Tesla. Then Tesla kind of leveled off, and the market's kind of pulled back just a little bit. So let's start with the SPX. Now, it was a bit of a roller coaster day today in the market. Now, here is ticker SPX. which is the S&P 500 here. Now, again, I still have the zones up here. We're above the midway point. We're getting into the upper portion of the zone. But if you look at the past 3 sessions, what I find interesting is a few things. Number one, the past 3 sessions, we've basically been flat up top, where we end up closing the day, okay? And that shows that, is the market really that bullish? If the market can't get above, like, 4016, 4021, in kind of like that area, if it can't close much higher than that, then really we're just saying that we're at the top end of, this chop box that we had back here, which makes perfect sense. And you know why? I say it all the time. Expansion, right, leads to contraction. Contraction leads to expansion. Expansion leads to contraction. And that seems to be what we're getting at right now. We are just contracting, moving sideways. But why does the market think it's in a bullish stance, even though the evidence says that we're just moving sideways? Well, it comes to something that occurred this morning. Let's go to the 5-minute chart, staying on the SPX, because there's way more liquidity that goes through ticker SPX than the SPY. And that's why I like to use it way more, because the more liquidity you have, the more accurate you can be. So let me open this up so we can see it a wee bit better here. And what I want to focus on is a couple of things here. Number one, I'll take the zone off here because I really only have that dialed in on the daily chart. And it is custom math for that zone. It looks like Bollinger Bands, but it's quite different. So we had a close up here yesterday. This morning, we open up with a gap down. And that's exactly what we talked about in yesterday's live stream. And then we moved down even further. And we got down to about that 39.50 area. And that 39.50 area, there is some pretty strong resistance there. It's definitely a sticky number. 38.50 was also a very sticky number. And another sticky number, it seems to be like every 50 points here, but 3,900 is an extremely sticky number on the SPX and the S&P 500. And you can see that once we got down to that 39.50 area, we rallied up to about, I'll call it 39.80, right? We moved sideways, and then we went higher. And then we got up and we flirted with that 4,000 level for a little bit, but not long, broke back down, but then finally got back above it and then stayed above it into the close. This is impressive, right? A big pullback. And this is, if you're going to trade something like this, this is a reversal trade, or better known as a U-turn trade, okay? And the U-turn trade is, we could get a gap down, or it could just be a down morning. But typically, within the first hour or two, that down morning U-turns and moves higher. Now, looking at this, okay, looking at this, if we were to place, and I'm going to do it right now, I'm going to place an anchored VWAP here I'll place an anchored VWAP to this morning's opening candle at 9:30. There it is. So we gap down, we open up. Now, when we open up, we sink further. We're beneath that anchored VWAP, which basically means that anyone who bought right at the opening bell was underwater, was negative, okay? But then we made that U-turn right around 39.50, which is a sticky number. And then we pulled back. We broke the anchored VWAP, okay? And we broke it with significant momentum and force here. This is when you would buy. You would buy on a U-turn trade. You have the anchored VWAP. It's set on the, or it's anchored to the first candle of the day. And once we break above it, and I'm not talking about the first candle break. We get up to it for about 15 minutes and we mess around. Then we get the first candle break. You don't buy on the first candle break. The second candle, if it continues moving, that's great. And that should get you, you should have your trade ready to enter. And then the third candle is your go candle, okay? And the third candle here happened to be a doji candle, which is a very neutral candle. And then from that, we just continued to move higher pretty much for the rest of the day. So this here would have been your open when you would have entered in, and then you would have set your stop loss to right below where the anchored VWAP was for the day. So let me clean this out here real quick. So you would have ended up getting in right around here, and you would have set your stop loss for just below that anchored VWAP, okay? And that is your long trade for the day, okay? As long as you are staying above your level, the anchored VWAP is going to start moving up with you, and you're good. This is a U-turn trade in how to do it. It works the majority of the time. Now, if, for example, you get that third candle and that third candle starts pulling back down to the anchored VWAP, you don't take the trade, okay? You do not enter the trade. You need to be moving higher on that third candle, or sometimes you might get a little red candle there because it was a doji candle today, which has a very small body. If it is a slightly red candle, take the next one, okay? Your next green candle moving up, as long as you're within a very short time frame. 15 minutes max, all right? And you should know whether you're getting in or not. And again, setting your stop loss, you can use the breakout, the actual breakout candle and the low of that candle as your stop loss to protect you, so you don't end up losing your capital, because that's not the name of the game. So this is one reason why the market is trying to prove that it's bullish, because of what happened, the price action today, okay? The markets just moved with strength. Forget that we gapped down. Forget that we sold off for about an hour. We moved higher. And that's the important part. Breaking above the anchored VWAP. Okay. Now, there is one other thing that I want to point out here. And I need to put the 5-period moving average on. I want you to notice something here. The anchored VWAP for today and the 5-period moving average. You can play the U-turn trade either way. I like using anchored VWAPs for the U-turn trade. They're a very profitable setup. and something that you can rinse, wash, and repeat over and over and over again. They are a really good trade. Now, the 5-period moving average, if we look at that, all right, this morning we gapped down to it, and it's the purple line that is going across the screen like so. So we gapped down this morning, we come down, we tagged the 5-day moving average, all right? And then we continue, we go below it. Then we hit our bottom right around that 38.50 area, and then we break above the 5-period moving average, and we don't look back. So you can play the U-turn trade using the 5-period moving average on a shorter time frame. Just like the anchored VWAP, it works either way. So those are two ideas for day trading that I absolutely love. Okay, either anchoring to the opening candle and then playing the U-turn trade, or using the 5-period moving average for your time frame, because you do have to adjust it for your time frame. Playing the U-turn trade on that. I absolutely love the U-turn trade. So enough on that. I just want to share that with you. Those two options that you have for using to conduct your U-turn trade. Okay, let's keep moving on here. Let's go back to, oops, I don't want to put highlights on here. Hold on, give me a second. Let me clean this chart up. I need to take these two marks off, and then we're going to go right back to the daily view on this. Let me adjust it right quick. Okay. All right, now, another item of business here, okay? And as a matter of fact, I need to update this number. I'll do it in just a moment. The fact that we are flirting heavily with the downsloping trend line that has held as resistance for over a year. I've been talking about this daily now in the live stream, okay? Look, this morning we opened up and we were back below it. Now, we dipped down this morning even further, even deeper below that downsloping trend line. But we were able to march all the way back up to it and then march above it. The 4,000 level is becoming like that midway point, just like when we were chopping around back in the first part of December, this right here. Remember, expansion leads to contraction, leads to expansion, leads to contraction. We're contracting right now. So holding above that downsloping trend line, which goes down like about like that, if we can continue to close above it, that's the market continuing to trying to prove that it is bullish. Now, we're in earnings season. Earnings season can very easily take these candles out. It can very easily take them out in a bullish sense or bearish sense. All it will take is several bad earnings reports from major players in different sectors, and we'd be falling like a rock. But the market is trying to be very resilient right now. Now, the dip this morning was mainly due to some disappointing earnings reports and some growth projections that weren't really in line. Then the resilient buyers stepped in. They showed up. They were most likely playing the U-turn trade, and they saved the day. The S&P 500, it's hard to see here, but it even dipped below its 200-day moving average. But it managed to bounce back like a champ. Now, let's not forget that there is some added drama in the geopolitical space happening too. We can't take our eye off of that because that can wreck the market also. Then there's stuff coming out tomorrow. Econ drops. I'm going to talk about that later on when I get to the end of this. That could also shake this market to its core. But today, it was really a tale of two markets. Early on, decliners were leading advancers by a landslide, but by the close, the table had turned. And the main indices closed near their best days of their best levels of the day. And I got to give a shout out to the little guys. The IWM and the MDY. They outperformed the big dogs today. They outperformed the SPY, SPX, and the Dow. Did really well. Phenomenal. Now, looking at the IWM is above its downsloping trend line. It just popped up on the screen there. Significantly. But if we look at where it's maxing out right here, same picture back here, okay? So even though it's been pretty successful and it's been marching up higher, we haven't broke above this significant level of resistance. And I'm going to call that at 190. That's the significant level. If you are bullish on small caps, you want to see the IWM top 190. Get above it, close above it, stay above it. That would be a bullish sign for small caps. Unfortunately, I don't know if it's there because of earnings. Your smaller caps, typically not making a profit, not a good balance sheet, not a lot of free cash flow. Those type of companies, I believe, will be hurt during this earnings season and the next. Okay. Now that I mentioned the IWM and the MDY, which are your mid caps, because they both outperformed, let's talk about the fight the market is having. It's a rotation fight. Risk on versus risk off. Let's start with risk off. We've got our defensive sector. Number one, gold. Gold on a relative strength basis is outperforming the SPY. This is a typically defensive type of asset, right? Now, it's outperforming the SPY. But remember, the rotation I'm talking about here is out of defensive sectors and into risk on. Going risk off defensive sectors to risk on in your more growthy names. So I want to point gold out because I don't want to hear anyone say, oh man, you missed gold and gold's been doing well. I don't want to seem like I'm picking and choosing on what charts I show you guys. So I'm showing you gold is outperforming and it's typically defensive. I think gold is going to break 2,000 an ounce and do it relatively in the short term. Okay. All right. Next up, XLP. This is your consumer staples. Let it load so you can see that on the chart there. Consumer staples. This is typically a defensive name. Now we're looking relative strength. And first off, when it comes to relative strength, we are making a series of lower highs, right? We're moving down. We're moving back down in this market. Now, the RSI here is at a 40.2, okay? Underperforming the SPY. Another one is XLU, which is utilities. Utilities is also underperforming the SPY. We have ourselves lower lows right there. And on the RSI, let it load, 37.9. Now, if this market decides to pull back, I want you to go look at utilities, XLU. Okay, a 37.9. It is getting awfully close to being oversold. Remember, 30 and below, and it's at a 37.9. It's getting close. And then you have defense in aerospace, right? The ticker here is DEF. DEF. Let it load so you can see. Invesco Defensive Equity ETF, right? Underperforming the SPY. And this is all on a relative basis. You can see the chart here. Come on. Let's go. I don't know why it's the past couple days, TradingView has been moving slow, but man, everything was doing really good up until then. Okay. Making lower highs, right? Let the RSI load up here, and it is at, drum roll, doot, doot. Got the Jeopardy music to play. Man, it's taken forever. A 51, right in the middle, but it's heading down. And then the last one is going to be XLV, which is healthcare, okay? XLV, which is healthcare, a defensive sector. On a relative basis, it is underperforming the SPY. Now, if you're expecting earnings to take a hit and you're expecting just negative bearishness, these sectors on a relative basis should be going up, not down, in relation to the SPY. But they're going down. These are risk-off type of sectors. Okay? Oh, RSI 43.7. Now, I want to flip the script on this. Let's look at risk on. Risk on. 2022, it was a risk-off year. Any type of risky asset, risk-on type asset did poorly. First up, let's look at Meta. Now, when it comes to risk on, I'm going to pull up some of the FANG names. Meta, Apple, NVIDIA even, Google, Microsoft, Netflix, and Tesla. Even though Tesla may have to, I don't know. We'll see how it reacts tomorrow. But after hours, it did really well. See your question there. Could you comment on Tesla? How does the market react tomorrow? Well, I did at the very beginning of this live stream. That's when I talked about Tesla, and I went through several points about the earnings and the earnings call. I went through and talked about it in detail there. And in the after hours, Tesla hit a high of 153. It closed at 152.35. So it did, after a little shockwave action, it did make higher highs and higher lows all the way up to 153 a share. And then it kind of flattened out as we got into that 8 p.m. Eastern time frame. And it ended up closing out completely at 152.35. So there's one little, I'm not sure about Tesla. It's the 50% compound annual growth rate that Elon Musk has said the company is going to shoot for over a multi-year period. But if Tesla only does 1.8 million vehicles in fiscal year 23, they're not going to beat that 50% compound annual growth rate. And Elon Musk on the call said that they were going to be over that 50% annual compound annual growth rate. So that's one discrepancy that I have that may have some investors confused. But right now, it looks like Tesla is going to open up in the green tomorrow, gapping up from the close. If everything holds exactly where it's at right now, Tesla will be gapping up as we go in tomorrow. But we do have that pre-market period where the stock can move around, and we've got some econ drops tomorrow morning that could affect the overall market and these growth names specifically that I'm talking about right now tomorrow. In this market, 30% growth means 300% growth. Isn't that true? Isn't that true? That is so true. Absolutely. Oh man. But anyways, if you want to catch that full statement on Tesla, just back up the video, start it from the beginning. It's the very first thing that I talk about. Maybe 5-10 minutes. It's not very long. But I think I touched every major point in what I saw, read, and heard through Tesla's earnings today. And again, I think they'll gap up in the morning. It looks like that's where it's at right now. Awesome. Glad to see that. Awesome. I just don't want to, what are we, 40 minutes, 42 minutes into the live stream, just kind of replay. I want to keep the markets, the live stream moving and not have everyone get too bored with me repeating stuff over and over again. So I greatly appreciate you for doing that. That is awesome. Okay, Meta Platforms. Relative strength, you saw all the other defensive sector names except for gold going down. Meta going up, right? All right, let's look at Apple, AAPL. Let's go to Apple. Oh, relative strength on Meta, 75. 75. Apple, over the short term, talking 2023 here, Apple aggressively up here. January 10th. If we go back to the beginning of January, it would be right here. So even since the beginning of January here, Apple has been going up. Relative strength, 71. NVIDIA, NVDA. These are all considered risk on growth names. And these are the more mainstream, common growth stocks. So when you're thinking about growth, NVIDIA has been on a major run. It looks like it's pulling a Three Sisters candle here, which could be a topping pattern for NVIDIA. We'll see. But anyways, just staggering. Relative strength, 74. So all three so far, relative strength has been in the 70s. And remember, 70 and above is technically overbought. So are these names about to roll over? Because they've been just so strong. Okay. Weekly expected move. I do want to mention it here for NVIDIA. 188 on the top side. It broke above that, and at least over the past two sessions since breaking it, it's been moving pretty much sideways, right? All right, let's keep going. Alphabet, GOOGL is the ticker. Let that load. Let's see where Alphabet is sitting. Good thing I covered my NVIDIA short. Yeah. Seriously, with that momentum that it's had. Okay, Alphabet, one of the smaller ones here, but still, relative strength, a 68. These are all outperforming. All of them are outperforming the SPY on the relative strength basis. All right. Alphabet. All right. Microsoft, MSFT. Obviously, Microsoft had some hard feelings with its earnings report last night. All right, let's load. Let's load. Yeah, great point there. It's just so strong for no reason. Simply because the market's trying to prove it's bullish when the economic data, it doesn't say that. All right. Been strong. Not as strong as like Meta or Apple or Nvidia. Relative strength is a 57. Still, take out maybe today. It was a down day for Microsoft. Maybe I shouldn't have included it on the list, but it is still, on a relative basis, outperforming. Netflix, NFLX. Let the chart load so you can see it. And then I'll top this off with the Qs. All right. Netflix right here. You can see very, very, very strong. Okay. 76 is the RSI. 70 and above is overbought. So, except for Alphabet and Microsoft, everybody else, Meta, Apple, Nvidia, Netflix, they're all overbought right now. All of them. Last one, Tesla, TSLA. Tesla. Now, its relative strength tomorrow, as long as the after-hour movement holds, it will show its strength even stronger than it currently is. So let me pull it up. Oh, that's not what I wanted. All right, let the chart load. There we go. All right, let's delete that guy. Let's pull the chart up here just to get it out of the volume. All right, been moving up. Relative strength is a 65. And again, that, as long as this price right here holds where it closed, 152.35, long as that holds, it'll gap up in the morning to its 50-day moving average, which is literally right here. That relative strength number will also tick up. Now let's go to the Qs. Now, all of those names, I had Meta, Apple, Nvidia, Alphabet, Microsoft, which it cooled off a bit today, Netflix, and Tesla. And then Tesla, it'll accelerate a little bit tomorrow if everything plays out the way it's supposed to. They have been on an outperformance over the SPY. Those were all growth names compared to defensive names like gold, but gold is outperforming. XLP, which is your staples, XLU, your utilities, DEF, your defense sector, defense and aerospace, and XLV, healthcare. Those are all defensive sectors and assets. They are underperforming compared to the SPY. The growth names are outperforming compared to the SPY. Now remember the relative strengths that I read off. The majority of the defensive sectors, they're down 40 and below. The majority of the growth names that I showed you are above 70 on the relative strength. So, look at the Qs here. What are we doing? We are above that downsloping trend line, right? Okay, that's important. We are. However, let me pull this up a little bit, and I'm going to show you a box. Okay? Let me pull you up here. All right, right about there. All right. Now, if we're just looking at where we are right now, it seems like, yeah, we've been on this awesome run. What I'm going to do, I'm going to give you two boxes. The first box is going to be January. All right? 2023 so far. This is 2023 so far. This green box right here. Now, I want to give you another box. Actually, yeah, let's do this. Let's do another box, but first, I want to just darken this up just a little bit. There we go. All right. In that green box is 2023 on the Qs. Q. What do you see? Higher, 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 higher. We've been making some good moves. Now, if I place another box, okay, I'm going to go back to I'll keep it fair. I'll go back to September the 13th. So all we're doing is just adding a few more months here, okay? And if I line that up, I'm going to change that color. What have we been doing? And I'll go down and even, match where we are right now. In 2023, what did we do? All we have done so far, and this is my evidence to you. We looked at the defensive sector. I showed you relative strength. They're all 40 and below. Their direction is down, except for gold. That was the only one. And then I showed you growth names. Their relative strength is all 70 and above. And their movement is all up, except Microsoft. And then you come here and you look at the Qs, okay? The Qs, if you look at this, the two boxes, the green box versus the yellowish orange box that also includes the green box, what have we done in 2023 so far? All we have done is gone from the bottom of the box to the top of the box. That's it. Now, go back to the beginning. What do markets do? Expansion, contraction. Expansion, contraction. The market goes up, the markets go down. This is a chop box. Now, if for some reason we can work ourselves outside of this chop box above, let's call it 290 on the QQQ. If we can get 290, close above 290, hold above 290, and build on top of 290, that would be bullish for the market. This is not in the grand scheme of things, bullish for the market yet, in my view. Now, we've had some bullish developments this week. I'll give you that. But overall, all we have done is gone from the bottom to the top of the chop box. We have done that before. We need to break above and stay above 290 on the QQQ for me to say, all right, market, you proved it. You are bullish. But until then, I'm going to remain cautious. I'm going to remain neutral on you, market, until you prove me otherwise. You may have tricked some market participants into thinking that, hey, 2023, it's a whole new year and we're going higher, baby. But you haven't tricked me yet. Now, you break that 290, you hold the 290, you build on the 290, and then you'll have proven to me you are bullish. Now, one last thing to show you on the Qs, okay? I want to go back to the high of the market for the Qs, which was right back here. All right. Now, let me move this over just a little bit. All right, hold right there. We have a high for the market up here on November the 19th, 2021 of somewhere around 405. All right. So let's take this measuring tape and let's measure from 405 almost there. There we go. 405. I want to measure first. First, I want to measure to 20%. Okay. From where we are, the first one I'm going to do, I'm going down to 20%. Okay. All right. So we were just above. So I'll go. Let's close it right out. Oh, almost right there. Right there. Okay. Ladies and gentlemen, from the top of this market, $405 a share on November the 22nd, 2021, over a year ago, 20% would take us down to about $324 a share. That's the line for a bear market. We are technically in a bear market still. And I showed you how the market is trying to prove through rotation that it's not in defensive names. They are underperforming. Their relative strength is going down compared to your FANG stocks, your growth names, which their relative strength is 70 and above, which is technically overbought. And then the chop box. All we've done in 2023 so far is gone from the bottom of the chop box to the top of the chop box. Now, we are at the top of the chop box. If we break out of 290 a share and go higher, close above it, stay above it, build above it, that would be bullish. But we're still below the 20% point. or 20% mark, which means we're still in a bear market. Technical term. 20% from peak. Now, let's do this. One more measurement to really put some perspective on this. I'm going to measure, all right, from the peak to where we are today. All right, which is right over here. Right there. We are nearly 30% down. 30%. We still need to go another 10% to technically not be in a bear market. We need to go another 10% to get out of this bear market on the QQQ. Okay? All right. So I hope this brought some perspective to what this market is doing. Now, looking ahead to tomorrow, okay? Thursday, market participants, they're going to get some economic data. Some of this economic data is very important and can shock the market. We get advanced Q4 GDP. The expectation is 2.6%. The prior reading was 3.2%. So again, expectation 2.6% for the advanced Q4 GDP. We also get December durable orders. The expectation is 2.9%. We get durable orders. You take out transportation. Expectation is a negative 0.2%. We also get weekly initial claims. The expectation is 205,000. Continuing claims. Prior read was 1.647 million. We get the December advanced retail inventories. Prior reading was negative 0.3%, and the December advanced wholesale inventories. Prior reading was 1%. We get that economic data an hour before the market opens. That can shake the market. That can take this market that has been, you can see it on the chart, it's right at the top of the chop box, and it can start moving it down. Or if the numbers are good and the market perceives them as good, then we could break out of this chop box tomorrow. Data dependent. Plus, we also then at 10 o'clock a.m. Eastern, we get December new home sales. Now, not so much for the broader market as it is for real estate, but it can affect the broader market, right? If new home sales come in and the numbers really super low, and the market's not going to like it. Now, the expectation is 614,000. The prior reading was 640,000. So we're already looking at another decline. And then earnings before the open. Valerio Energy, Comcast, Archer Daniel, American Airlines, Dow, Northrop Grumman, Southwest Airlines, MasterCard, and Blackstone. They're some of the more notable earnings that come out before the market opens. And do I have? Yes, I do. Earnings Whisperers on Twitter puts this out. Thursday, we've got this column here. American Airlines, Southwest, Nokia, Valerio, MasterCard, some of the names that I read, Nucor, JetBlue, Northrop Grumman, Alaska Airlines. reporting before the market opens. So a lot of airlines, defensive names, and finance reporting before the market opens. And then after the close, we get some more tech, Intel. That'll be a big one after the close. And then Visa after the close. Who else is down here worth anything? Eastman. So we got some stuff after the close too. And then Friday morning, Chevron. That's a big one before the market opens. American Express, HCA Healthcare. I mean, my goodness. Charter, that's another one. Oh, and I believe Charter Communication comes out tomorrow before the market is open, and that's one that's running super hot. Okay, so hopefully I have showed you how the market is trying to prove to market participants that it's strong, that it is bullish. And I hope that I've also showed you that no matter what the market says, it is not shown that it is bullish yet. There have been some bullish developments, yes, but I'm looking at the bigger term picture here, not narrowed in on the day, today. I wanted to take a bigger picture view today, and I hope that I've shown you that, giving you that bigger bird's eye view perspective of the market right now. Okay, if you have questions, now's a great time to plug them in because I've gone over all of my notes for today. As you get your questions in, do me a flavor. Do me a flavor. Click that like button, share this video with a friend. I would greatly appreciate it. If you like the perspective and you want more, consider clicking the first link in the description. Join us on Patreon. I'd love to have you there. In our Discord, we've got public and private channels on Discord. So even if you're not in our private group, you can still be a part of the public conversation there. So consider doing that. That'd be awesome. Okay. All right. It's just so hard when to know if the market perceives as good or bad. That is a true point and a valid point. And even the best of the best, even the analysts who spend way more time analyzing this market, analyzing different sectors, different names in those sectors, that know way more than I do, they can't even agree right now. They can't agree on which way this market should be going. AMD is the prime example of that. Yesterday, we had an analyst come out and give a bearish opinion on AMD. The stock pulled back. The day before, an analyst came out at a different firm and gave a very bullish opinion of AMD. And the stock went up, what, like 8-9%? I think their perspectives were not wrong. I just think their timelines were a little wrong. I think in the short term, we do need to have a little bit of a negative bias until proven otherwise. But the long term, we should have a bullish bias. And that flip between a negative market to a positive market, I think that could occur sometime mid-year. Q2, Q3 maybe. And I didn't even mention the Fed today. I haven't even mentioned the Fed today. And there's really no reason to. The Fed's not doing anything right now anyway. I believe the Fed is in their blackout period right now. I'm 99.9% sure the Fed's in their blackout period right now, getting ready for the next FOMC meeting, which we will get the next rate decision on February the 1st. You all know that I think it is a quarter basis point rate hike on February 1st, another 0.25% on March 22nd, and then the Fed will hold there at 5% and keep it for the rest of the year. Maybe December, first rate cut, maybe. But time will tell how that plays out. Also, what do you think of an in-phase short at a retest of 217? In-phase has run up, and their relative strength has been pretty strong. They did receive a downgrade this week, and I think they're going to receive more downgrades because that's one that has run up some. I'm opening the chart up a bit here, and I'm going to in phase right now. ENPH. Now, I love in phase. I love in phase for the future. I think they've got a good product. But okay. Where are we looking at right here? I can't, my gosh, $340 a share. Man, oh man. All right. So, man, the pullback has really played out here. All right. Down 40% from its top on December 5th. Now, if we go back just a little bit further and tighten this up some. Okay. Since let me move this back. There was a gap right here. Let me just line it back up. An air gap for in phase right here, and in phase blew right through that gap. And then I said it would back when we were looking at this area. Now, I've got marked on here next support around 180. Let me get my highlighter out. All right. So if we are looking for where it could find some support, you've got 180 right here that in phase has found support before. It's also been a chop box going up to maybe around 180 to 210 has been a chop box. Now it finds itself at 110 right now. So with that in mind, I'm wondering if in phase maybe tries to break out and gets rejected somewhere below 220. Oh, my apologies, wrong thing. I want to open it up a little bit more here. All right, come on. There we go. All right. I'm going to go ahead and put a box around here. So the air gap definitely played out nearly perfectly. But I'm wondering if, and it's really like 219.50. And then, dropping all the way down to 180. That's a big spread. But that's about where I think in phase might start to chop around at in this box. So if it's at 210 right now and you want to do a short when it gets back up to 217, that looks like it could play out pretty well. All right, let's just lighten this just a little bit. Oop, too much there for yellow, I guess. Okay, so as it gets back up here to these this patch of 3 candles, the low end of that is about 219. If you go to the bottom of the wick, that's where you get what is that, about 215, 216. So I guess the most I'd probably push it is to 222. But once it starts getting into that 215, 216, like you said, 217 area, if it can start marching up there, then building out a short position, I think, would be a wise choice. It is definitely big time below its 5-day EMA. Big time below it. I mean, that 5-day EMA, where is it? It's currently sitting at 221. So in phase is either going to have to start making some moves higher or move sideways to get that moving average to reconnect with it, either pull it down or price action go up to reconnect with it over the next few days. So that's what I would say. Yes, for in phase, build out a short position. It might get up to 122. You could also do it too on the breakdown. Instead of building into the short position as it gets up there, see if it goes up to 216, maybe 220, maybe even up to 222, and then on the rejection, then take the short on the way down as a possibility. Okay. Yep. 217. Yeah, so you could do it one of two ways. The riskier way, build into it as it's moving up to that 218, 220 area. Or the less risky is play it off it being rejected. You might not get your full position, but it would be less risky playing it on the rejection at that price point. But either way I think can work here in this situation. This thing just got way too hot. But also keep in mind, it has pulled back 40%. And that's significant. Okay. Any other questions? Or we'll wrap this up for tonight. I'll give you a minute or so. Just know Amazon, sure thing. Just know I'm live every day the market is open. We start 7:45, 8 o'clock every evening. All right. Oh, yeah. So for Amazon, Nvidia, Microsoft, all three of those, I did talk about earlier in the live stream, because they are all part of, oh, actually, Amazon I didn't. Nvidia and Microsoft I did. Nvidia is overbought. Nvidia is overbought. I think Nvidia at this point is looking to be a short candidate. It does have a lot of relative strength. It is, again, in overbought territory. A lot of the FANG stocks, Apple, Meta, Netflix, Nvidia, they're all 70 and above on their RSIs, which is overbought. With Tesla's night it had tonight, it was in the 60 range. That's going to be pushed up higher tomorrow. So where could that then potentially take it? Amazon here, it's still in my chop box, so here's what Amazon did today. It came down to its 50-day moving average, and it bounced off of that, and then it got right back up to this mid-range where price action has just been bouncing around, going sideways right through here. And if you look at the volume shelf profile, that is the main price point for buying and selling. And then right below it, in the $94 price range, that's the second biggest place, which 94 just takes it down to the bottom where Amazon's been catching a bounce. So I think there's going to be some weakness here. I don't think, I could be wrong, but I don't think this is going to go much higher. It is at this overhead resistance. Also this morning with the big gap down, it did break below this longer term support, which is now invalidated because of it breaking down. So I'd have to move it down here, and then adjusting that resistance puts us like so, which now we're right back into a symmetrical triangle again, which is neutral, meaning the stock is just going to move sideways. So that's what I see from Amazon. It has earnings next week. I don't expect Amazon to really go anywhere between now and earnings unless they pre-announce something. which would obviously affect the stock. There's probably more potential for downside right here at this moment than upside. So sideways movement, potentially downside tomorrow for Amazon. And that's where it is currently sitting. NVIDIA, I already talked about that. I'll pull the chart up right quick, but there's really nothing else to say. It's overbought. It's overextended. Oh, I typed in the wrong thing. NVDA. There we go. It's overbought. It's overextended. This one, if you look just over the past, going back to, maybe May time frame, you're looking at about around the 200 mark as like it. That's the top. And then we go down to 195, and then we go down even further to 193, where it's at right now. So it's going to break down, I think, really soon. Really soon. All right, move that line out of the way. It's got from 193 maybe to 200, but I don't think it's got anything more in the gas tank to go past 200. I don't think it's really got, anything really to go above 195. It looks like it's trying to pump the brakes here and then either move sideways to get this RSI to cool off, because the RSI is at a 74. That's overbought. Or pull back to get that RSI to cool off. Now, one thing, it is above the weekly expected move, which is at 188. It could, over the next 2 days, pull back into that 188. I was going to go to the candlesticks here, and I was just looking. Okay. Yeah, I don't see it here. It really looks like, if it looks close to anything, the candle structure, it ran up, exclude the first candle of this right here, but it ran up, and then the next candles are curling like this, and you could really even potentially say that it's starting to flag right here. And just on the very, very short term, if I do this, right, I need to change that. That's the support line. And then let's add a resistance line. Which, again, it's just real short. That could be setting up a pennant right there. I mean, it's not much, but it is one. And if you go look at chart patterns here, let me clean it up a little bit. Typically, when you see that you know, it's real tough to call. I mean, it could be flagging, could be wedging there, but nevertheless, if it is doing something like this, right, and price gets even tighter, that thing could just fall right down on its face. And it's also, some could see that as maybe bullish if it was down lower, like what it did down here with these two red candles. You could say that was, a bit of a flagging pattern right there, or just a real small pennant, which is bullish, moved it up. But I think this is it for NVIDIA. It is extended, and it's got to cool down. It can't keep running like this. Let's see, Microsoft MSFT. Now, Microsoft had a bad day today. Guidance was in the earnings call. Investors didn't like it too much. There's a lot of slowdown coming. And I think overall, the next 2 quarters are going to be rough. The next 2 earnings reports, this one and the next one, the earnings report in Q2, I don't think they're going to be too favorable to many in tech. Now, 2023, you can see Microsoft, it's gone up. However, it has curled over here, but really, if you just look at the past week and a half, it's just been moving sideways. Now, Microsoft, its main price point is 238 and then up to about 240. That's where it's been mainly trading. Its biggest volumes of trading right through there, right through there. Again, right through here, through there, right through there. That's like the mid-range for Microsoft. So if it could catch its footing, maybe it could go up to its down-sloping 200-day moving average, which it would definitely find resistance there. I think that would be as far as it could go, which right now is at 255. Tomorrow, it'll potentially drop down to 254. So there's potential upside for Microsoft, but it's right there midway. If we get bad economic data tomorrow, and we get a bunch of it, by the way, we get a bunch of econ drops tomorrow, most of them before the market opens, including some major earnings reports before the market opens. Depending on how, that moves, how those reports come out, it could have a negative positive effect on Microsoft. It's literally neutral right here in the middle. All right. And then Art K, and then we'll wrap this up for tonight. And then I'll be back tomorrow. Make sure to click that like button for me and share this video with a friend. Those 2 things help. Now, midway through this live stream, I was showing you the receipts for why this market is trying to prove it's bullish. You look at defensive names, market's not so bullish. I'm sorry, I take that back. You look at defensive names, I got to mix up for a moment. And it is risk on right now because they're all going down. Relative strength, all below 40. You look at the growth names, risk on, and their RSIs are all above 70. So ARK's just been along for that ride. It'll probably shoot up tomorrow too because of Tesla. Tesla is gapped up in after hours, and it's closed in the after hours at 152.35, up 5%. That'll be reflected in the tape when the market opens, which will be a gap up. So there is probably a little more room, but there's not a lot. It gets to about $40 a share, and if you just look to the left here, 40 has been like the max. Resistance, resistance. And then you drop down a little more locally and you got 38, 39 as resistance too. So somewhere between that, 38 and 40, I think ARK's going to get hit and it's going to start moving down. Its RSI is at a 66. It's getting stretched, but it's not quite overbought yet. So I think there is a little bit more room for it to move up, but not much, before it gets hit and brought back down. Okay. Well, thank you, ladies and gentlemen, for joining me. I greatly appreciate you being here every day with me. I love your questions, your engagement, you guys even talking back and forth to each other. It is awesome, and I greatly appreciate it. With that said, I'll be back tomorrow before the after the market is closed to talk about what happened, why it happened, and what to expect going forward. And click that like button for me. Share this video with a friend. They help out the channel more than you can know. And I greatly appreciate each and every one of you. So thank you again, and I'll see you in the next video. Take care.